Welcome on board, everyone. Today, I'll be walking you through our webinar about real estate investment trust, where we talk about pivotal themes in real estate investments and what to expect in next few years. I'm Musab Iqbal, Vice President REITs at JS Investments, and I'll be taking on the presentation. So let's just deep dive into understanding REIT, their essence and purpose. So, what is REIT and why was there ever a need to have a fund where underlying asset is a real estate? Well, let's discuss about first what is REIT. REIT is comparable to a mutual fund where underlying asset is not stocks but real estate. Ownership of the fund is established through unit holding, and based on that unit holding, REIT distributes earnings generated from the real estate in the form of dividends to the unit holders. REIT allow individual investor to diversify investments in real estate, effectively spreading across real estate asset classes such as residential, retail, offices, and logistics. They all have varying annual return rates, where in real estate terms it's called capitalization rates. This strategy of investing in REITs not only assists investors in lowering their overall risk, but also help them to diverse across the universe of real estate assets. As of December 31st, 2022, total 8 REIT schemes have offered units to its holders, where total fund size has reached to 168 billion approximately, while stakeholders continue to express their interest to invest in real estate through REITs. This has become evident when RMC license have increased to 18. So this all comes down to a question: why does REIT exist? Well, the answer is fairly simple. Direct real estate investments tends to be accessible to investors with the means to fund substantial amount in the real estate sector. REIT presents more inclusive investments vehicle where real estate investment pool funds from various investors and invest in diversified portfolio of real estate assets. This structure allows individuals with varying financial capacities to indirectly participate in the real estate sector. Purchasing REIT units has potential benefits, which include real estate ownership, rental income, capital appreciation without the same level of commitment and direct management responsibilities associated with owning a physical property. While now we get into what are the investors' benefits within REITs. While there are various benefits, I'll just mention the notable ones, where number one is the higher dividend that we pay, more than 90% from the REIT fund. We get different tax shields. Along with that, the REITs are fairly transparent and are looked by SECP and the trustee. Along with that, the repatriation of dividends are easy for foreign investors. Now we'll deep dive into the mechanics. While I'll deep dive directly into the flow, in a real estate investment trust fund, a strategic investor invests their land, building, or property along with their funds with other investors who bring in their fund in a scheme managed by a licensed REIT management company. As a result of their contribution, investors receive units or shares representing their net asset contribution to the total fund. These investments in project assets are subsequently employed to cover costs and expenses associated with the smooth operation of the real estate. The distribution of these earnings in the form of dividends is then allocated to investors based on their individual net asset contribution. Now we'll explore variety of REITs available in Pakistan under the SECP REIT Regulation 2022. Well, there are 4 REIT structures. One is a rental REIT, where investors invest in properties for the purpose of generating rental income. The other one is developmental REIT, where an investor invests in construction or refurbishment of property for future sale. Then there is a hybrid REIT, where investors invest in a REIT scheme, which is a combination of different types of REIT scheme. And then there is investment-based REIT scheme, where there is a REIT scheme established for making investment in one or more real estate REIT projects for capital gains purpose, excluding the agricultural land. Now, since we have discussed so much about RMC, REIT management company, we all want to know what an RMC or a REIT management company is and what role do they play overall in managing funds. Well, the role of REIT management company is to comply with all relevant SECP REIT regulation requirement, approximately 43 of them. They work in the best interest of investors and they have to be transparent. Now, what do they bring on the table that other direct real estate investments don't? Well, REIT management companies have experienced real estate professionals. They have background in diverse portfolio management where they are overlooking different types of asset classes. So they understand intricate details of risk and return profile of real estate. They use sophisticated analysis tools. They design investment structure in a way that they are tax efficient for their investors. They have access to institutional resources, such as research teams, legal experts, and financial analysts. They have risk management capacities. They are efficient in timing the market, knowing when to enter with which project and flow most of the amount of returns given with the minimal amount of risks. They have professional network, which can be valuable for sourcing investment opportunities. They are articulated in their compliance and reporting requirement with the government agencies. They have track record on successful fund management. And last but not the least, they have access to economies of scale, leading to cost efficiencies. Now, let's discuss about Pakistan thriving REIT market update. Well, real estate activities contributed about 2.2 billion rupees or 5.7% to the total GDP in fiscal year 2022 and 2023. Currently, there are 8 REIT schemes that have offered their investors with the units, aggregating a total amount of 167.6 billion. SBP have made amendments within their foreign exchange manual where they do not require from foreign investors special permission to repatriate their investments. Along with all of these points, the last point is quite notable and quite important because there were only a handful of companies within July to March fiscal year 2023 that have shown positive market capitalization, out of which where REITs is one of them. Now, since we've talked about REITs, it's very important to talk about their underlying asset, which is real estate. We'll be discussing about 4 asset classes, which is residential, commercial, hotel, and logistic. Let's start with residential. Currently, there is a quite huge housing shortage. As per 2017 consensus and the recent World Bank report, we are 10.4 million shortage for current housing units, out of which 3.4 million housing units are required. We are shortage of in urban housing, while 7 million is within rural. By 2025, we'll be required about 17.2 million housing to accommodate the ever-growing population. Currently, 47% of the total household lives under overcrowded condition where there are inadequate infrastructure facility available. Problems with housing as per IMF has been noted. Total of them are 5, which includes land title documentation, real estate regulatory authorities transparencies, availability of long-term finance, foreclosure laws, and credit scoring. While the population is growing, a lot of KLI, just the tier 1 cities in Pakistan, have seen their expansion, while Karachi is radially expanding along with Islamabad and Lahore expanding on their southern side. This is due to that people want to have affordable housing within their cities. Now, main downtown have gotten very expensive to the point they're not anymore affordable for the middle income groups to remain closer to their workplaces. Now, let's talk about offices and retail. Well, Karachi, Lahore, Islamabad office grade A and B markets with average occupancy have approximately ranged from 55 to 98%. This shows the resilience during these macroeconomic challenges that the businesses are thriving through tough waters. As far as retail is concerned, there has been quite a lot of developments happened in KLI, where total future upcoming supply is estimated to be 14 million square foot. We are of the opinion that once they come online, the retail market will be saturated. While hotel market in fiscal year 2022, as per civil aviation authorities, there were 4.7 million people disembarked from international airlines to Pakistan, which is 53% growth from fiscal year 2021. This may have been due to post-COVID restriction being lifted off and people allowed to travel around the world. Furthermore, tier 1 cities have sustained occupancies in these tough times. In fiscal year 2023, Islamabad has been observed to have the highest occupancy of more than 90% and their ADR being the highest to be around 30,000. This is due to their stature of being a capital city in Pakistan Pakistan, where they cater to foreign dignitaries and others. The hotel room rates have increased with inflation, which has caused their corporate clientele to move towards a much more smaller hotel or resorts because of their F&B amenities being expensive as well. However, with the inflation, there is a silver lining. A lot of local tourists, the Pakistani tourists who were traveling internationally, have now started to travel locally, which have given a boost to our tourism industry in Pakistan. This have taken an interest from hoteliers such as Marriott, PC, Swiss, Nova One, and Wyndham to increase their footfall in Pakistan. Now we'll get into the logistics, which is the fourth and the last asset class of Pakistan that we will discuss today. So there are total 4 different warehousing available in Pakistan, which includes general warehousing sheds where goods and raw materials and bulk goods are kept. They are not temperature controlled. Then there are distribution centers that are within the city limits to reach to their clients as quickly as possible. There are bonded warehouses that are located near ports, and then there are temperature controlled warehouses. Historically speaking, there are a lot of challenges within the logistics industry in Pakistan. It's quite underdeveloped compared to regional peers. We have a market insight in Pakistan. There is no singular metric charged for rental rates from their clients. It could be either within they use different metrics basically. They use cubic tons, weight, square feet, all sorts of things. So there's no standardized procedure to charge rates from the clients. So let's talk about agriculture. Pakistan loses close to around 40% of its annual agriculture output due to lack of proper storage facility. This is an issue which has been recognized by the government. And now there are multiple financial incentives given to the farmers or people that are connected to the agriculture industry. Number one being is Kisan Dost Finance. Others are collateralized warehouse management and electronic warehouse financing. We are of the opinion that in 2024 and 2025, there will be quite an increase in logistics warehousing for agriculture development. This has now brought us to our last slide where we discuss about the transformative power of REITs. Now, the real estate sector in Pakistan faces a range of underlying challenges, including issues surrounding property legitimacy, transparency, concerns, encroachments, encumbrances, defects, and incompetence, among others. However, REITs have emerged to be a promising solution with the potential to address these obstacles and transform the real estate landscape, because a real estate is transferred to a REIT fund. Everything challenges that we go through when we are investing alone in a real estate has already been taken care of and been overlooked by Security Exchange Commission of Pakistan, the trustee, and the RMC. Moreover, the introduction of REITs can play a pivotal role in curbing inefficiency and lack of documentation within the sector. The establishment of regulated REIT framework involves stringent compliance and oversight measures, creating a more accountable environment. This can deter fraudulent activities and promote ethical practices among real estate players. Pakistan has immense potential for development of commercial projects under REIT structure. Due to the high investment requirement in the market, small retail investors currently have limited access to real estate investments. The structure of REIT schemes open up the opportunity for small investors to participate in real estate market. Real estate schemes innate transparency also has the potential to attract overseas investors, sparking their interest in Pakistan's real estate industry. REITs will also serve to enhance Pakistan's real estate market's professionalism and transparency. These schemes offer developer not only a means to reduce taxation potentially, but also a viable exit strategy and a medium to raise capital without the need to sell their property. Thank you. We will take up any questions following on and we'll answer them accordingly. We hope that you have enjoyed our webinar and we look forward to hear from you. Thank you.
So let's start our Q&A session with the first question. Over we go. Does JSIL offer REIT? Can you give details? Yes, JSIL offers JSIL REIT Fund, which is a closed-end fund. We are currently evaluating multiple REIT projects that may provide the opportunity to public to invest. Question number 2. How can we invest in REIT? Well, it is very straightforward. An individual invests either in a closed-ended REIT fund at its early stages and or invest in publicly traded REIT fund on stock exchanges. Who will be the real estate construction partner in this REIT fund? Well, construction partner is generally mentioned in the offering document. who have considerable experience of constructing and executing real estate development of differing magnitude. Another question. As a person with a very little knowledge, is it allowed to invest in REIT? What is the procedure to buy the shares? There are various REIT funds that are Sharia compliant and a Sharia advisory board. Another question. Could you provide some details on the tax advantage of funding real estate using REITs? Well, there are various tax benefits in REIT, such as income distribution of more than 90% provide tax shield at corporate level. Another question. As per the ongoing economic condition of Pakistan, is it viable to lock the investment? Well, in the ongoing economic condition, investing in REIT may be considered a viable option. Disclaimer, however, this is as per individual investors' risk and return profile, where PIDs right now are paying lower than what the prevalent inflation rates are. Investors are considered to be at the losing end. However, the projects that we have evaluated has the potential of providing higher returns than the inflation itself. Another question. How to mitigate performance risk associated with REIT project? It is very important to evaluate project feasibilities before investing in REITs as a first step. Furthermore, to minimize the risk, it is also important to invest in REIT fund where there are multi-asset classes within the real estate having differing annual returns and varying risk profiles. And that's when we conclude our Q&A. Thank you very much, everyone, and we hope to see you again.